This company is really interesting. So first off, read this disclaimer carefully. So we are looking at Canadian Solar. So this is in the solar industry, obviously. The reason why this industry is especially interesting, that's because there is incredible growth potential. Because that's one of the most important factors when looking at any investment is what is the growth potential. And this industry is just beginning. It recently emerged from being, almost a joke. The solar industry was not taken seriously. Now it is becoming a viable alternative. So they are in the utility space, commercial and residential. So here's some company overview. More than 38 gigawatt solar modules shipped, around 10 gigawatt solar project pipeline around the world, module capacity over 10 gigawatts, cell capacity over 9 gigawatts, active buying customers in more than 150 countries, subsidiaries in 20 countries and regions on 6 continents, 17 manufacturing facilities in Asia and Americas. So let's jump into the charts. The thing is that, for all intents and purposes, we are in a bear market. I am all about letting the trend be your friend. There are, however, some dips that I would consider getting into, and that is in any industry where the growth potential is abnormally high. The growth potential for a company like, say, Apple is limited. It is already so big. But when you look at these entirely new industries, it's something quite different. So this is all the history we have for Canadian Solar. The ticker is CSIQ. So we are using weekly data points. Going all the way back here actually to November 2006, so you can see that we had a major crash during the financial crisis. Interestingly, you did see that it reached a momentary low here in November 2008, and that low was pretty close to the ultimate low. This is the recent developments. You see that there has been a pullback. The interesting thing is that we have pulled back to a level where we have been many times in the past. So let's do some measurements. So from where we are now, approximately to this level, that's minus 81%. So if we in this bear market are destined to revisit this level, obviously that would be bad. The thing is that the solar industry was drastically different way back here in 2012 or 2013. So the narrative and the outlook it's changed too much. So it is very unlikely. It could happen, but very unlikely. So we are currently at a very low level. There's been support here in the past. We are seeing that an increasing number of mutual funds and ETFs are moving into the clean energy industry. As a matter of fact, many funds are considering or already have blocked fossil energy companies from being a part of their portfolios. There actually is an ETF at the moment, an S&P 500 ETF, that specifically excludes the energy industry, the fossil fuel energy. So the trend is very much in favor of clean energy, and solar energy is one of the most promising in my opinion. But from a technical standpoint, is this a bullish chart? No. The case you could make here is that this is a bit of a rounding-ish bottom. Maybe this could become some kind of deformed cup and handle. It could happen. There has been support here in the past. We are at a low level, so there are these, you could make that case. And if you have to have some long positions, this would certainly be one of the ones that looks very appealing, given the long-term outlook for the industry. So let's look at some daily data points. So you can see that we are below most of the key moving averages. If you look at the percentage moves, they are rather big. So this rally here, as an example, that was almost 70%. This crash was minus 47%. So when there are moves, they are rather big. So this is definitively a spicy stock. You know, the moves are big. You gotta have a strong stomach for these kinds of investments. If you look at correlations with the S&P 500 here on the weekly data points, there's a 55% correlation, positive. So a very modest correlation. On the daily data points, there's currently a 63%. It's been as low here as 44 back in 2018. So all in all, from a technical standpoint, we are at the low level. From a very long-term perspective, this is definitively very, very interesting. This is one of those few bargains, genuine bargains out there. So let's actually look at the fundamentals, because that makes it that much clearer. So here you have Saks.com. They do have a number 3 hold here, but they do have a style score, value score of A, which it doesn't get any better. The growth score, F momentum. They calculate growth in a different way than what I have been talking about. I am talking about more general growth potential, long term. This is very much based on current, right here and now calculations of earnings growth and stuff like that. So the industry rank, top 32%. It's in the solar industry. So the industry rank is also pretty good. This is one of the larger companies in the space, so $962 million in market cap. So you could certainly make the case that this one will be around, so no matter how bad the bear market gets, Canadian Solar is... there's no reason to think it's going to go under. Got the low PEG ratio here. You can look at the forward PE, 6. That's pretty darn good. And some of the competitors here, got First Solar, also a very interesting company. So you could also here clearly make a fundamental case for Canadian Solar. Now let's actually look at some other interesting charts. So one that makes sense to bring up is TAN. That's the Solar Energy ETF. So you can see that the TAN ETF is also, it's fallen back to a level where we have been many times in the past. So you could make a case that this is an interesting buy level for a long-term perspective. That is. So let's actually calculate how far we are away from the low. So if you do it from there to there, minus 42% distance. If you go here to the daily data points, zoom out a bit, look at that, you do see that rounding bottom pattern. And of course, the benefit with going into the ETF is that you do have more diversification. You don't get the single company risk, though you could make a very strong case that the risk with the Canadian Solar specifically is limited given its enormous size. Generally speaking, I am not a fan of buying the dips and plunges during a bear market. However, if I were to, buy some dips and plunges, I would do that in an industry where there is tremendous growth potential, where the level we are at today is minuscule compared to where we are likely to be in the future. So industries like clean energy, robotics, artificial intelligence, and a host of other of these very innovative and futuristic industries, that is where it makes sense. So whatever you do, of course, you want to let the trend be your friend. And one of the big benefits with Canadian solar is that because it is heavily traded, there are options available